I want to walk you through a position where I broke my own framework, not once but at every stage. Entry, monitoring and exit. The stock is Rajesh Exports. Before I go further, one thing I want to be clear about the point. There is an active SEBI matter involving this company right now, and the company disputes the allegations. I'm not going to comment on that case. I'm not qualified to judge it, and it isn't my place to. This video has nothing to do with what Rajesh put it or didn't. This video is about what I did with my own money before any of that was public. Because the mistake here isn't that I held the stock that later became controversial. The mistake is that I never had a real reason to hold it in the first place, and everything that followed from that one gap compounded for years. Let me show you how exactly. I bought Raj Expo a long time ago, and if you asked me back then why I bought it, I I want to be honest about the real answer. Would have what would have had been. It wasn't a turnaround thesis. It wasn't a value thesis. It wasn't really a growth thesis either. It was this could be a lottery stock for me thesis. I want to unpack that phrase because I think it's it's doing a lot of damage that isn't obvious in the moment you say it to yourself. A lottery stock framing means you've already decided the position doesn't need to justify itself the way every other position in your portfolio does. You're not asking what the business does, how it makes money, what could go wrong, or would have what would have to be true for this to work out. You're asking what if it goes up a lot, and that question on its own is not an analysis. It's hope wearing a costume of an investment decision. There was no 7-question checklist applied here, partly because at that time I hadn't built that framework yet, and partly because even after I built it, I never went back and re-underwrote the positions I've already held using it. That is my that is that's its own mistake. I'll come back to it. But the deeper issue is this. I held the position for years without forcing myself to write down in one sentence why I owned it. Not the story I told myself in passing, an an actual falsifiable f- thesis. Something with a condition attached to that if violated would tell me to sell. I didn't have that. I had a vague sense or that gold and export felt like a reasonable business to me to be exposed to. A stock price that had been volatile enough in the past felt like it could move up a lot again. And that is not a thesis. That is a story, and stories don't have exit conditions. Only thesis do. This this is the gap that everything else in this video flows from. Not a bad analysis, the absence of analysis, replaced by a feeling of replaced by a feeling of by a feeling that the position would eventually work out, simply because it was the kind of stock that someone sometimes does. At some point while I held this position, net profit started declining. Here I can show you it actually. So I bought it around 2022, and then net profits declined here. I noticed it. I'm not going to pretend I didn't. The numbers I saw the decline clearly in the results, and I didn't act on it. not because I made a considered decision to hold through it. I didn't act because I didn't know why was it happening. Because the company had issued no calls, no nothing, and um, and basically the company was just posting net profits and forgetting about it. This was okay. So this is the first question in the framework I use on every turnaround position today. Before anything else, why is this number moving the way it's moving? So if a net profit is going up, I ask why. If a net profit is flat, I ask why. If it's going down, I ask why. Why is important for me? And is the reason something that gets fixed or something that is permanent? I never asked that question in this position, not once, because even if I did, I didn't have any way to find out. And honestly, I tried 2 or 3 times to find out, but nothing really happened. I should have sold it then because of the governance failure, but I didn't. That was my fault. That was completely on me. What I actually did was notice the decline, feel a vague discomfort about it, and then do nothing. Because acting would have required me to investigate, and investigating would have required me to admit it. And plus, again, I didn't really have a way to investigate this because the company was basically acting like a shell company. I want to be precise about what kind of mistake this is because I think it's more common than people admit. This isn't the mistake of misdiagnosing a problem as as fixable when it was actually permanent. That's a real and different mistake. And I would have and one I've made another position I would talk about some elsewhere on this channel. In this is something that comes before diagnosis. I never ran a diagnosis at all. I saw a warning sign and let it sit there unexamined, because examining it felt like more effort than the position deserved. Because again, there was no information there. That's the cost of treating something as a lottery stock. You don't just skip the entry analysis, you skip the ongoing monitoring too. Um, because you never built a reason on to monitor it in the first place. Eventually, the situation around this company became public. Regulatory concerns, investigations, all of it became headline news. The stock fell sharply. Right here. I think, no, not this one. This. It was not a thesis break exit. I didn't sell it because a predefined condition I had written down in advance was triggered, like I do now. I had no such conditions because I had no thesis to break in the first place. I sold because the narrative around the stock turned sharply negative, and the fear of holding through the narrative became larger than the willingness to keep holding. Look at the position. Look at the full pattern here, because I think this is the part worth remembering more than any individual detail. I entered on a story I held through deteriorating fundamentals because I had no framework to interrogate them, and exited on fear once the story turned negative. Narrative in, uh, inertia through the middle, and fear out. At no point in that entire sequence did I make a decision driven by analysis. Every single decision was driven by emotion. Optimism at start, avoidance in the middle, and panic at the end. The position never had a process, it only had a mood. The mood that changed three times: greed, patience, fear. Okay. I want to show you exactly what this position produced and how I invest today. Because only thing that makes mistake worth talking about publicly is whether it actually changed something. This question, why is this declining, and the cause is fixable or permanent, exists it, in its current form because of exactly what I described. I and my mentor built it specifically so that I would never again sit and watch the numbers or number deteriorate without forcing myself to investigate why in writing before deciding what to do next. Because when I started investing, at that time I had the psychology clear, like I have to buy low, sell high. But I was just like playing around with capital. And when I started losing money, then I thought that I have to make a framework. And then after a year, I made a complete framework, and now I just operate with that framework. Anyways, it's not an abstract best practice. I read somewhere it's a direct repair and specific and of a specific failure. It's basically trial and error in a kind. This one. Okay. What a specific metric or event would break this thesis, um, or am I supposed to exit when it arrives? Exits because I never had an answer to that question, and on this position, I had no conditions written down in advance, which meant my eventual exit um, wa- wasn't a decision. Every position I hold today has this answered before I own a single share, not after, before. Okay. Beyond the checklist itself, three specific changes I came directly out of this. It came directly out of this position. One, I no longer hold positions that I can't describe in one sentence, with a falsifiable thesis attached. If I can't attribute why I own something in a way, that thing turns out to be wrong. I don't own it. This gap could go. This could go up. I don't own it because this could go up is not a sentence that can be wrong. It is not a thesis. It's a hope. Two, every position is gets re underwritten, not because not just analyzed once at entry. The monthly portfolio updates on this channel exist partially because of this position. If I had been forced to write a one paragraph thesis update on Rajyosh Expo every month, the absence of any real thesis would have been obvious within the first update, not years into holding it. 3. Deterioration. Fundamentals are now a trigger for analysis. It's not a trigger for discomfort. I quietly sit with it, and the moment a number moves the wrong direction on any position I hold, the question isn't how do I feel about this. It's why this is happening and what my framework says about this. I lost money on this position, that's true, and I'm not going to dress it up as something other than a loss. But the more expensive version of this mistake would have been me making it again. Twice, five times, one larger and larger positions. Because I I never built a discipline that makes a mistake like structurally harder to repeat. This is what discipline looks like now. I want to be direct about why I made this video. It would be easier and probably better for a view count to show your positions and that worked. Yes Bank, Indigo Paints, the analytical wins. A channel that only shows those um, is showing you a highlight reel, and a highlight reel tells you nothing um, about whether the person making it actually has a process or is just got lucky a few times and is choosing carefully what to publish. Rajesh Expo is not a highlight reel. It's an it, it it's in this video named specifically with the actual loss and actual reasoning or lack of it laid out plainly. I want to say one more time clearly. This video makes no claim about whether Rajesh Exports did anything wrong. That matter is still being decided by the people whose job it is to decide it, and it's not mine to comment on. What I've described here in the is entirely about my own decisions made before any of this was public with my own money. And if there's one thing I want to leave with you guys from this video, that it's this: the cost of a bad position is never just the money lost on that position. It's whatever you fail to learn from it. Because it if you don't um if you don't extract the lesson precisely, you don't just risk repeating the mistake, you risk repeating it at a larger scale with more conviction. The next time a story feels compelling enough to skip the analysis, I'd rather show you the mistake and repair that than pretend the repair was never necessary. That's the standard for this channel going forward. Same it's been from the start. Judge the process, the capital will follow. Thank you. And please like, share and subscribe if you like this. Thank you.